Tesla has been doing extremely well this year in terms of performance, but one thing that will definitely turn into a problem for Elon Musk is its rising number of competitors. One such competitor is Nissan, who will prove to be the latest competition for Tesla. But will Nissan really succeed in the American market? Keep watching as we analyze the Nissan stock as well as their probability of success. But before we do that, subscribe to our channel $1 World for regular stock market updates. Nissan was an early pioneer in the EV market, introducing the Leaf, one of the first mass-produced EVs, in 2010. The Japanese business, on the other hand, has stated that it would phase out the Leaf in the coming years and replace it with a new car in 2026. Last year, the ambitious EV manufacturer debuted the Ariya crossover SUV to begin ramping up EV manufacturing. The company's Infiniti luxury business has not yet developed or delivered an EV, but on June 23rd, it announced a brand update during a dealer gathering in Los Angeles, which included a new logo, modernized showrooms, and a new concept electric car that it anticipates to be available for public sale in 2026. The updated Infiniti EV car will feature a wider wheelbase with a reduced overhang, new headlight and taillight designs, a single light strip across the width, and a rear that looks like it belongs to a Porsche. It will be manufactured in Nissan's Canton, Mississippi plant, which will become the hub of Nissan's North American electric production. According to Electric, Nissan is retooling its Canton assembly factory over the next 3 years with a $500 million investment to prepare it to build the Infiniti EV in 2025 and 2 new all-electric Nissan cars in 2026. The business intends to build 2 EV crossovers at the factory in 2027 and 2028. Since its inception in 2003, the Canton factory has produced over 5 million internal combustion engine vehicles, but the firm intends for it to become Nissan's EV production and technological center in the future. The Mississippi facility will be able to produce 410,000 automobiles each year. Nissan is right now trading at $8.12 with a market cap of $15.892 billion and a volume of 66,495 shares. Due to delays in the lockdown and supply chain issues, Nissan's global unit sales fell 14.7% to 3.305 million in the fiscal year 2022. Despite this, the company's net sales climbed to JPY 10.6 trillion with a JPY 377.1 billion operating profit and a JPY 221.9 billion net income. These figures show considerable increases in operational profit as well as a good reversal in automotive free cash flow. Nissan's unit sales in China fell by 24.3% as a result of pandemic-related manufacturing cuts. Meanwhile, sales in Japan climbed by 6.1% thanks to rising demand for electric vehicles. North American sales fell 13.5% as the firm prioritized value over volume, while European sales fell 9.2%, but climbed 5.5% when adjusted for Nissan's exit from the Russian market. Other regions of the world showed improvements in the fourth quarter as a result of semiconductor availability, with particularly good performances in Europe and North America. As part of its Nissan Next strategy, the corporation is shifting its focus from volume to value, with electrification as a top priority. In Japan, its electrification ratio hit 48%, with electrified models Note and Aura selling 113,000 units. Nissan concentrated on increasing its business presence quality in the United States, earning a 20% increase in net revenue per unit for the Rogue model and a 48% increase for the Pathfinder. In Europe, the electrification sales mix more than quadrupled, rising from 12% to 23%, thanks to strong demand for the Qashqai, Ariya, and Leaf models. Worldwide production volume of 4.1 million units and worldwide sales volume of 4 million units are expected in fiscal year 2023, representing a 21% increase over the previous year. Revenue is expected to increase by 17% to JPY 12.4 trillion, while operating profit is expected to increase by 37.9% to JPY 520 billion, resulting in an operating profit margin of 4.2%. Net income is expected to increase by 42% to JPY 315 billion. In fiscal year 2022, the firm expects to pay a dividend of JPY 10 per share, with a payout of JPY 15 or more per share expected in fiscal year 2023. The company is increasing shareholder returns by improving performance and financial basis, including seeking to reduce the price-to-book ratio to less than 1.0 in order to increase shareholder value. Nissan's corporate transformation project, Nissan Next, which is focused on enhancing manufacturing capacity, costs, key markets, products, and technology, will conclude in fiscal year 2023. Nissan next introduces new competitive models with the newest technology, while the business also works on innovations for future mobility, such as all-solid-state batteries and the X-in-1 approach to e-powertrain development. The corporation admits to falling short of the Nissan Next milestone owing to changes in the Chinese market and plans to establish a more nimble corporate structure. A new midterm strategy is in the works and will be published in the autumn of 2023, with the goal of ensuring sustainable growth, increasing business value, and achieving carbon neutrality. Despite present obstacles, Nissan will celebrate its 90th anniversary in 2023 and hopes to flourish for the next 100 years. Rapid developments have been observed in China's automotive sector, notably in the uptake of electric cars and the prioritization of software. In China, the obstacles include managing the market's rapid development and adapting strategy to retain leadership in the EV category. Despite previous difficulties in China, Nissan intends to expand and secure return customers by using its strong brand and current customer base. They want to accomplish this while handling uncertainties in the business environment. Despite global uncertainty, Nissan anticipates record-high revenues in 2023 as a result of strategic management reforms and increasing sales across all sectors. Nissan's Nissan Next effort is viewed as a remedy to previous issues such as chip storage. They expect the initiative's efforts to yield fruit in the following year, generating recovery and improved sales. Nissan intends to integrate its US EV strategy with its worldwide EV strategy, which involves exporting the Aria from Japan and localizing 4 new electric vehicles in the United States, beginning with platform, battery, and powertrain. The Nissan Leaf was excluded from the IRA since it was produced before the IRA was announced. Future models will be developed to meet IRA requirements by addressing platform, e-powertrain, and battery localization. Makoto Uchida highlighted that Nissan intends to reap the benefits of new models and supplier relationships. There is also a special emphasis on China's expanding market for new energy cars and the C category, where Nissan's Sylphy model excels. He did, however, agree that the current situation in China is difficult, and that the corporation must find a balance between pricing and profit in this market. While Nissan has a big operating capacity and sales strength, Uchida stated that owing to the adverse market conditions, the firm must be careful and not unduly hopeful. Nissan intends to constantly monitor market trends and review its China operations strategy over the following 3 months. Raw material prices, which grew dramatically in fiscal year 2022, have plateaued and have usually dropped, according to CFO Stephen Ma. Although they remain high in comparison to 2 or 3 years ago, the corporation has factored some of this improvement into its projections for the coming year. However, materials connected to electric cars continue to be in great demand. The company's decision to give production volume was motivated by enhanced visibility of its supply chain and recovery patterns. Their declared production output for the coming year is 4.1 million, with retail at 4 million, showing a 21% increase in volume. This expansion extends to their wholesale volume, which has a substantial influence on their financials. Investors have expressed great optimism about Nissan stock, anticipating a bullish trend. However, the recent announcement by S&P shattered the dreams of some stakeholders. In a statement, S&P downgraded Nissan's rating by 1 notch to BB+ from BBB-, placing the company below investment grade. This decision has raised concerns among investors, as it indicates increased credit risk and potential challenges for Nissan in accessing favorable financing terms. The downgrade by S&P highlights the existing difficulties faced by the company and the need for Nissan to address its financial and operational challenges in order to regain investor confidence. To end it off, Nissan is a great stock to buy, but to compare it with Tesla just doesn't seem right. Both the companies operate in the same industry but with different values, making both of them a good buy. Remember that this is not financial advice and you should always do your own research and make informed investment decisions. That was all for today. Let us know if you think this stock will make you rich or not in the comment section. Hit like and subscribe to our channel $1 World for more such penny stock videos, and we will see you in the next one.